Let me ask you, the number of long-term unemployed Americans has continued to go down, but it's still exceptionally high by historical standards, over 3.6 million. As you know, long-term unemployment can have serious consequences for individuals and their families and can permanently impair the growth prospects for our economy if workers are stuck on the sidelines for too long and their skills and networks become out of date. Do you feel that the Fed's policies have been successful in helping to reduce the number of long-term unemployed Americans? Is there anything more that the Fed can do, or is there congressional action that you might believe is necessary in order to meet that challenge? And is boosting demand the best way to reduce long-term unemployment right now based on our current economic conditions?
Well, Senator, we are very focused on and concerned about the high level of long-term unemployment. It's really unprecedented to see something like 37% of unemployed in long spells. I mean, what can we do? We can try to foster a stronger labor market generally. We don't have tools that are targeted at long-term unemployment, but in taking account of how much slack there is in the labor market and attempting to stimulate demand so that there's more spending, there's more production, and more jobs in the economy, we have seen long-term unemployment edge down. Very slowly, it's taking a long time for those people to be reabsorbed into the labor force, but our approach is to foster a stronger recovery and try to get the economy back to full employment, and I think they will see gains.
So if increasing demand is part of it, is there anything else that you think that the Congress, maybe not the Fed, should do in order to achieve getting those numbers, historically high numbers, down even quicker?
Well, I think it's also appropriate for Congress to look at what some of the special needs of long-term unemployed are. These are spells that are very damaging to families, put great burdens on families, both in terms of income and even health burdens, that burdens on children and marriages. And so I think it certainly is something that Congress could look at along with us.
Is skill sets, helping individuals with their skill sets, something that we should be considering?
Yes, I mean, sometimes the long-term unemployed do need to acquire different skills in order to be reabsorbed into the job market.
Now, I know Chairman Johnson asked you a question on income and wealth inequality, and I want to follow that up in terms of monetary policy decisions. You know, over the last 20 years, the top 1% of earners has grown by more than 86%, while incomes for the remaining 99% have grown by less than 7%. And even during our current recovery from the financial crisis, the top 1% have received 95% of the income gains over the last 3 years, while real medium income remains 9% below 1999 levels. So, of course, we all applaud those who achieve financial success, and we're thankful for that. But we're concerned that the vast majority of people in our country feel they're not sharing in the economic growth. And when widening income and wealth disparity make it harder for ordinary working families to move up the economic ladder, as studies have shown to be the case, it creates, I think, a greater challenge to our overall economic well-being. So my question is, how, if does the Fed account for income and wealth inequality in its monetary policy decisions? For example, the Fed's looking to broad statistics like GDP, but economic growth is only accruing to a small share of the population, while the rest feel they are still in a recession. Is that something that the Fed would wait longer to tighten until broader-based growth takes place, or is there a broader range of statistics, including measures of income and wealth, that the Fed should be considering?
Well, I think that the trends that you have described in detail are extremely disturbing trends with very significant implications for our country. And I am personally, and the Fed is very worried about these trends. The major thing that we can do is, as we try to assess the state of the labor market and appropriate policy, to look at a very broad range of statistics and metrics concerning the labor market, not just the unemployment rate, but in particular other measures that suggest that the labor market is not functioning properly. The fact that we've seen very slow growth in wages, for example, I take as one of many pieces of information suggesting that the labor market is has not returned to normal and has quite a ways to go. And it's something that's appropriate for us to look at as we consider appropriate monetary policy.
So you're looking at a broad you'll look at a broad range of factors as you are making your decisions.
Absolutely.
All right, thank you, Mr. Chairman.